Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Hi there, Yoni Schmidt here, hosting today's episode of the Same Day Podcast, where I connect with top business and real estate leaders. Past guests include Chip Gabarino, a local restaurateur entrepreneur in the Tulsa, Oklahoma market, Elliot Nelson, the CEO of the McNally's Group, Monica Gilroy of the Gilroy Firm, and many more. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. That is why no matter what rental you have, single-family homes, condos, townhouses, apartments, we have the management solutions for you. Go to KeyrenterPMC.com or email us at info@KeyrenterPMC.com. Today, I'm excited to welcome Lane Kawaoka, the founder of The Wealth Elevator, a prolific real estate investor, educator, and former professional engineer turned full-time entrepreneur. After raising over $230 million in capital and acquiring control of over $2.1 billion in commercial real estate assets, Lane is on a mission to democratize wealth creation and empower everyday professionals to escape the rat race. Through his podcast, books, mastermind groups, and educational platform, Lane provides access to exclusive private investment deals and practical wealth building strategies. He is passionate about helping others shrinking the middle class and building generational wealth on their own terms. Welcome to the show, Lane, and thank you for being here.
Yeah, thanks for having me. Hello, everybody.
Lane, let's talk a little bit about how you left a secured engineering job to focus full-time on real estate investments. What was the moment that you made that leap, and do you ever, miss the W-2 life?
Okay, so I was working my engineering job, picking up little rental properties, living that dual life that I think a lot of the listeners might be doing right now. And you probably have your earbuds in at work or doing emails when you're on the toilet, doing that type of stuff. Hopefully not bugging your property manager too much. But yeah, I did that from 2009 to 2015. I started with a few rental properties in Seattle, Washington, and then I went out of state, buy properties in Birmingham, Atlanta, and Indianapolis. And I probably would have bought more rental properties as I kind of lived a double life. Drive the Mercedes to work. Everybody kind of scratches your head. What the heck does that guy do? They didn't know I had 11 rental properties at the time. Probably would have kept doing that, but in 2016, 17, started to go down the syndication path. And then that ultimately created a second job for myself, which made me ultimately quit my day job. But if not, I'd probably be still rocking out, probably in a government shutdown. So probably be milking the clock right now, some easy job, and probably have a lot more rental properties at this point.
Yeah. Wow. Well, so far you've built a portfolio worth over $2.1 billion. What were some of the key principles or rules you followed to scale so successfully, especially as, call it a middle-class professional that was starting out?
Yeah, there's a few inflection points looking back. And that's kind of the basis of my new book, The Wealth Elevator. There's different floors of the wealth elevator. And as you transcend different floors, the rules and strategies change. When I first started, I graduated college with a good engineering job, was able to save $30,000 per year. I wasn't yet an accredited investor yet. My net worth was zero. So the name of the game, or, what I call in the book, the first floor of the wealth elevator, buy little rental properties, get professional property managers to do your work so you can focus on your highest and best use, which for me was at my day job. If you're a doctor, that's playing doctor. If you're a dentist, that's drilling teeth. Not necessarily messing around with fixing and flipping, for some of the white collar professionals out there, but definitely leveraging a property manager to kind of, freeing you up so you can spend more time making more money and acquiring more assets. So I would say around 2015, I had 11 rental properties, and it was starting to becoming a bit of a headache for, I think at the time, a few $100 of cash flow per property, $3,000 for 11 properties. Not bad, but I would say most of my clients look for $10,000, $15,000 of passive cash flow from a portfolio. So you probably need to triple or quadruple that unit count at that point, and also triple and quadruple the headaches. And more importantly, when you become an accredited investor, you get on the second floor of the wealth elevator, the legal liabilities, like getting sued by all those tenants, become a lot more. It will happen at that point. It's not a matter of when, but if, or if but when. So yeah, that's kind of that. I would say the big, for a lot of the listeners, that's I think you get to that point where you're transcending from the first floor to the second floor of the wealth elevator. To put my finger on it, it's when your net worth goes over 1 mil.
Yeah. Wow. So talk to me a little bit about, how crucial is it to have, professional property management in place, when you're scaling your portfolio of rentals, right? I mean, you talked a little bit about not if, but when you get sued by, a resident, which we, are quite familiar with, managing about 3,500 doors in 7 different markets. But what's the role of the property manager in your mind when it comes to mitigating those risks for you?
Yeah, I mean, at our peak, we've had I think over 10,000 units. So unfortunately, when you have that many, there's a lot of pools in there, and people have accidents. And I can't tell you how many people. It's really sad, right? Like people commit suicide all the time, and luckily, knock on wood, nobody really comes after you for that. I guess because it's self-inflicted. But you get craziest of things, right? And most of the time, they're just trying to work the lawyer to get your insurance payout. But either way, you typically have to spend $20,000, $50,000 to defend yourself with some stupid, frivolous case. The way we take ownership of properties, we bring in investors as passive investors, LP. So even further behind the lines, some would say, that's the beauty of an LP position, limited partner, limited liability. But yeah, we also use third-party property management too. It adds in another layer of insurance protection in there. Now, I'm not giving anybody legal advice. I'm just telling you, as an owner of thousands of units, going through the process many, many times, it is a nice layer of protection there in addition. And, the way we take ownership of properties is in a syndication group, I think, which also gives us a little bit more protection. But as being the sole owner, managing member, you're on the front lines, right? You're the one making all the decisions. I think it's kind of silly. People have this false insecurity of, I got umbrella insurance, or I own it in an LLC, an entity. They don't care. You still got to defend yourself, bro. Right? But yeah, having that third party property manager, at least to point the finger at, or at least somebody to kind of help pick up insurance costs, or blame legally. I think that's I think that's a no-brainer, especially if you're still in the first floor of the wealth elevator trying to build your net worth. You need to take on a little bit more risk to get there. I think you got to go in with a PM.
Because that PM will ultimately reduce the level of liability for you, the owner, and remove a certain level of responsibility as well.
I think you're right. I'm not giving any legal advice, right? But what I can say is definitely when stuff hits the fan, there's another person to blame out there. And that's essentially what litigations are. They're just settlements at the end of the day. And if you have another party in there like that, it just gives another option. Now, what you do with that option is going to be up to you. But it always is nice when you have a professional company in there, who's got their own insurance policy. Of course, check that.
Right.
But, that's from a management standpoint. It's like, I tell all my investors, you guys got to figure out what your highest and best use is. For most of my clientele, guys who are accredited investors, they typically make multiple 6 figures at their day job. It certainly isn't, going in there changing light bulbs or arranging contractors and stuff like that. That's just, not in their pay level or their hourly rate range. Now, if you're a guy who makes under 50, 100 grand per year at a day job, then perhaps you may have to get your sleeves dirty and, do the PM work yourself to save the 10%, right? Like that's the That's I forget that internet form out there, but that's their attitude, right? They have a lot of broke investors, broke
Is it
people.
Bigger Pockets?
Brokepeople.com, yeah.
Oh,
So anyway,
brokepeople.com. Never heard of it,
so
but that's interesting.
but yeah, they always talk about, saving the 10% and not paying a property manager, right?
Yeah.
Things on the cheap. Very scarcity minded, if you ask me. But from a business perspective, it's like, yeah, if you make under a certain amount of money, then yeah, you need to get your hands dirty, right? Just like a lot of my investors, once you get to the second floor of the wealth elevator, it makes a little bit more sense to go into deals as a passive LP than to be the operational
Mhm.
partner.
Yeah, makes sense. Let's talk a little bit about your community platform, the Wealth Elevator. It's all about education, right? What are the biggest misconceptions or mistakes that you see from first-time investors that are coming in and they want to work with you?
Yeah, I mean, we typically do an onboarding call with everybody, and if they don't, especially if they don't read the book, right? If they read the book, the first step is always figuring out what floor of the wealth elevator you're at. Ultimately, what's your cattle grade, what's your net worth, and what's your
Mhm.
income. Like I said, if you're somebody who makes under $100,000 a year and a net worth under $500,000, you're probably going to be in the basement level of the wealth elevator.
Mhm.
Don't listen to me. Don't even go to my
There's a
podcast or
basement,
read.
so you don't
Don't.
even start on
Well,
0 or 1. You're in the
yeah.
basement.
I mean, that's why I wrote the book, because there wasn't many books written out there for guys who are pretty decent with their money, make some good income, or business owners.
Mhm.
A lot of Dave Ramsey, CZ Orman personal finance books that I enjoyed, when I was kind of broke myself, as a college student. I used to read Kiplinger magazine and Money magazine when I was a teenager. I'm kind of one of those
Mhm.
weirdos. But what do you do when you make a good multiple six-figure job, or you run your own business and your time is more valuable than money? Some investors who already, have great incomes, they may just step over little rental property ownership and go straight to single syndications and private placements. Some
Mhm.
people do a little bit of a hybrid where they may, they may live in Oklahoma and they might want to own some local rental properties, of course, get a PM to do it, to do
Mhm.
the management, but they like the pride of the ownership. But, you know, to me, like, you want to be diversified, right? Not only in real estate, but geographically in real estate. So that's where the syndication world opens you up to, owning an apartment in Dallas, owning an apartment in Florida, owning an apartment in Denver, whatever, but also
Yeah.
other asset classes too, other than multifamily apartments. I mean, I kind of
Yeah.
specialize in multifamily apartments. It was great for me on the run up, but when the commercial real estate came down 20-30% off the peaks these last several years, I got hurt pretty bad.
Mhm. Yeah. Let's talk a little bit about diversification, because you've said before that, Wall Street robs people and 401ks are a trap. Not something that I completely disagree with you, but can you break it down? What do you mean by that? And what the average investor, could be doing differently?
Yeah, I mean, if you're talking about the average investor, they should do exactly what they tell people to do, right? To invest in alternative investments like what we're talking about is not what the average person should do. And everything I'm
Hmm.
saying is not financial advice, because I'm not a certified financial planner, apparently. If not, I
Yeah.
probably have to charge you and also put you in marketable securities where I get paid off of that,
Yeah.
right? But yeah, I don't think everybody should own a rental property. You need to not be an idiot.
Hmm.
Unfortunately, most people out there should not be investors, and they should just go into like ETFs and the standard American investment diet, right?
Yeah.
But if I think it makes sense to try it a little bit, right? Test the part of portfolio, especially if you're brand new to this. And arm yourself with a community and people around you that also do it. And then, eventually, the people that I hang out with, they have mainly majority of their net worth in alternative investments, things off of like your retail investment front. And that's my big problem. Like REITs, real estate investment firms, they invest in the same type of assets that we do. Sometimes we even compete with them on the bidding table.
Hmm.
The problem with that I see is like you got all these middlemen, right? You're taking on all the risks, and they're taking all the returns. I mean, how else do they have these big institutional buildings and the marketing firm, you know? Whereas what I like to do is, you know, whether you're a little landlord and you're buying the investment yourself, or you're investing directly with the GP sponsor, you're cutting out all these middlemen, and more of those returns go to you. Of course, you have to do your due diligence and working with good, honest people and looking at the deal yourself. But, you know, I think that incremental risk is worth it, getting directly to the deal, right? Essentially buying wholesale instead of, you know, the way most people invest, to the retail investment market.
Do you follow the same guidelines as REITs with quarterly distributions to your LPs and so on and so forth, or is it a little different?
REITs are a little bit different. I mean, it depends on the prospectus of the fund, right? Like what I like to target is very specific business plans where, you know, like a real simple one would be you're going in, you're buying a building, you're improving the appliances, new flooring, paint job, you know, 5-10 grand of renovations per unit, and you bump the rents up $100, right, to increase the NOI to sell it in 3 to 5 years. So that's a standard business plan. Or you build something from scratch, right? We were talking about a project that you're going to go kind of near, right? That's build up ground up development, right? Nothing, just buying barren land. You build up a property and you sell it, right? That's huge value add there.
Yeah.
In these properties, you do it, you get in, you get out, and you sell it, right? Where a lot of these other assets that institutional firms like to buy, or in these like institutional funds, typically they're buying properties that have already been value added. Like the yields aren't great, but there may be a little bit less hair on the deal. Those are the ones that they like because they have some lazy person in New York managing like a gazillion assets for them. So that's what they like. So it is a little bit less risk, but to me, the risk is your market volatility. And if your market comes down 10%, now you're gone in that deal. Where if you're going into a deal with a little bit more upside, you know, you're exposed to going to the business plan, but you have that, you know, you're creating that buffer for you. No different than if you buy a beat up, dilapidated house, you put 100 grand into it, you're going to do that deal because you're going to make 2 or 3x at 100 grand investment, right? Kind of that same concept, but in commercial assets, you know, and that's how we try to get away from like little properties that mom and pop investors have access to under $5 million net worth, right? We'd like to get into commercial assets there.
Interesting. Thanks for sharing that. Let's talk a little bit about AI. It's revolutionizing nearly every industry right now. How do you see AI intersecting with real estate investing, wealth education, and you know, your own operation at the Wealth Elevator?
Yeah, so I have a lot of e-courses that I give away for free. Like, you know, used to be when I first started to do my podcast back in 2016, I would teach people how to buy little rental properties remotely. You know, find guys like you to manage it. You know, go to the underwriting. People want to, you know, go to my website. It's there for free. But I've been kind of thinking lately, like, that requires a little bit of work, right? At least a few hours to go through. Like, it kind of is maybe better just to put it on demand and people just query the right questions. Although there's always issues with, like, if you don't know what you don't know, you don't know ask the question, right? So maybe it's better for you to go A to Z to the e-course. But hey, people are lazy, right? So I think, you know, that creating a custom GPT is a project that definitely my team is working on right now. And then we've got like our main flagship product that, again, we kind of, you know, people book calls with us and we get to know them. We typically unlock it for free, is the syndication LP due diligence e-course. That thing is a mouthful and certainly probably takes somebody over 10 to 12 hours. But I think it really educates people to, like, if you might have owned rental properties, but if you're looking at a syndication deal, like, what do you look at? You know, how do you validate the people running the deal? How do you validate the numbers? You know, do you look at the reversion cap rate, exit cap rate, what in the underwriting? Like, what are the good assumptions to assume? So, you know, like your operators not just being super overzealous with some other assumptions. So that's what's in there. I think we can get it to a point where you just upload the pitch deck and, financials, and maybe it highlights good questions for you asked, and then you go from there. I'm a little bit wary of it, like, say, is this a good deal, right? Like that's setting yourself up for failure, I think, because AI will just be biased and tell you what you want to hear, like an employee that thinks you're going to fire them, but we're not going to fire AI. It's here to stay. Uh, but I guess on our operations side, like our role is to go find good deals out there and kind of source it. We certainly, I mean, part of that is working with the right people and network, so you don't just get garbage, right? But I think it certainly does a lot of job on sorting the financials and things like that. And that takes away a lot of like lower level staff. Like we used to have a lot of underwriting staff. Now we don't really need that because AI does a pretty decent job of taking unstructured data and putting it somewhat structured. At least so you can preliminary start to create a piece together T12, for example. And then from there, we plug it into our own homebrew analyzer and we use our assumptions and we say, hey, what do we think that this is going to run based on our assumptions? Not what the operator is doing, but what we think ourselves. And then from that, we decide if we're going to invest or not. But that's where the line is. Like, I don't want to use this AI thing to tell us whether we're going to invest, which is why I feel, at one point I was a little afraid. It's like, well, everybody's just going to like upload documents, hit go, and it's going to be thumbs up or thumbs down. And it's like, well, then you're going to have all these like ridiculous platforms out there where every like new operator and syndicator is just going to put up their investment, and it's not going to be able to tell the difference between like fake it till you make it operators and sucker deals and the good deals and the good operators. And a lot of it just falls back to, I think, I feel comfortable in this world of investment, at least being a service provider that we are, that you're always going to need to know the people. You're always need to have personal relationships with people. This is real estate at the end of the day. And you're always going to need to take this data, the raw data, and interpret it. And I think that's what our role in this whole thing is about.
Yeah. Interesting. Tell us a little bit about how can investors get involved with any of your upcoming deals or masterminds? Is there room for international investors? And what kind of check sizes are you looking for when bringing on new people?
Yeah, so we work with accredited investors. We typically will not bring in anybody on under $50,000, $100,000 or less. We find that those are the worst investors. Although, hey, if you're new, go through our content and get educated, and maybe in 5 years when you're ready to write real checks, let us know. I'm always looking to build a relationship with people long term. But yeah, we I think the big thing is that we provide is like the community, right? There's a lot of internet forums where people will pay to play, the sponsorships, hidden sponsorships, kickbacks, etc. We don't really play that game. So a lot of what I do is like we'll do events and we'll have investors get to know other investors, and that's something I enjoy, and that's really what opened me up to this whole world. In 2015, I had 11 rental properties and I thought I was hot stuff. And then I started to interact with all these other accredited investors, and I started to realize like, whoa, there's something well beyond owning a bunch of rental properties. There's like, and that world is like what I distill today in our curriculum, which is the deals, doing due diligence on deals, the taxes picture, right? If you get all these passive losses, real estate professional status, and then the infinite banking. And this trifecta was something that consistently came up over and over again as I started to haphazardly interact with a lot of our accredited investors. And I was like, whoa, this is cool. And then I went back to my job on Monday and I was like, wow, this is so different, right? All the people in the Kibuko world we were saying earlier. And this is that's what I wanted to create for people. Like, you look at all these investments, and especially if you already own rental properties, this stuff works, right? And what a sham the retail investment market, they're taking all the returns at the end of the day. And that there's a better way of doing this if you do it directly. It's hard to scale, and that's where the syndications and private placements come in. But where do you get access to this? Well, it's all people. So unfortunately, if you're a shy person like how I was at one time, being an introverted engineer, you probably don't want to get from on the other side of your computer. You have to put on some pants, literally, right, and meet people. So I try to create events, try and keep it fun, keep it pretty casual. We bring people out to Hawaii. We do an annual retreat every year. I also vet everybody coming, right? That's why I require everybody to have an onboarding call with myself, so there's no weirdos, right?
Yeah.
But that was kind of what I wanted to create, right? With people that I vibe with and have similar values as myself and our community. And I think it's more fun kind of doing this with other people.
Yeah, absolutely. Lane, thank you so much for, educating me and educating our listeners. Really appreciate it. The Wealth Elevator, we'll put the link to your website below for anyone who's interested in learning more. If you have any questions, feel free to connect with Lane through his website. Is that okay?
Yeah. And if you guys pick up the book on Amazon, we'll shoot us a receipt, I think, or screenshot a receipt to team@thewealthelevator.com, and then we'll hook you up with the PDF and then the audiobook version too.
Love that. Thank you so much. Appreciate your time.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.